And 72% of the time the market goes up. And the answer came to me. And that's when I developed my chart. The answer came to me is because, just like Caterpillar, when they pull their money out, you get out. Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. I get nuts.
With your host, Phil Grande.
Bye. Welcome to my podcast. Hi, I'm Phil Grande, philsgang.com. A lot to talk about today. Let's talk about the opening this morning. You know, it's interesting how the market, the yields this morning were up. And that means the tech would get crushed. So Wall Street, right at 9:30, so pre-market, everybody was getting ready to sell tech, sell short, and of course Wall Street, with its six big institutions. Remember, people don't realize there's just six institutions that control the whole stock market, really. And if you think of it in another way, say six people. Think of it that way. It's even crazier to control the whole stock market. They make the decisions on the $50 trillion, but especially the $12 trillion out of the $50 trillion that goes into our stock market. You're talking BlackRock, Vanguard, State Street, Fidelity, T. Rowe Price, and the Capital Group. Now that's six companies, but at the end of the day, you really got six people to make a decision. They control all of the money. So, and they look out for their interest, not for your interest, not for the retail investor. Okay, the retail investor, they could care less about. And the proof is, why is it that 65 million retail investors who trade every day through a broker or by themselves lose money? Even with a broker, they lose money. 85% of them lose money every day. So this morning, with yields going up, Wall Street got panicked. So they, right at 9:30, they wouldn't do it before, but right at 9:30, bam, they went in and bought a whole bunch of treasuries that dropped the yields down. So tech would rally and not get crushed. That's called financial engineering. Now, if you understand yields and you understand what makes stocks move, okay, it's institutional money, and if you understand yields tell you which direction the market's going to go before even the market knows. It tells you exactly where that money is going to go. Is it going to go into house building? Is it going to go into tech? It tells you exactly where it's going to go. That's the yields. And so think of the yields as a compass. The stock itself will identify clearly if money is pouring out of the stock or going into the stock. And that's the one, they're both very important. One's the compass and the one is money. For example, on a day like today, when yields went down, we saw tech stock going up, but the problem is when you looked at the money, okay, the flow of money was pouring out of tech. Okay, so they forced yields down to push 65 million people don't know what they're doing into tech. Wall Street wanted to save tech. And a smart trader would look at the yields, saw, okay, it's going down, so that's helping tech, but not much, because when you look at the trend of money's pouring out of the stock while the stock's moving up. Well, how could that be? Well, it's simple. It's called short covering. People that were shorting are just buying back their own shares. That pushes the stock up. But people who don't understand that look at tech going, oh, I better get in, get me in before it's too late, get me in. They don't understand. All you have to do is look at the trend of money, and it's pouring out of the stock. And if you see the stock going up, it's telling you it's going up not because new money's coming in. Okay, it's going up because people who are shorting it is just buying their own stock back. So this morning there was some financial engineering going on. But before I get into that, I want to talk a little bit about this war that we're in. And it's really crazy what's going on here. What really people don't understand, delaying this war, how it really hurts our market, the stock market, your 401ks. you got to get in there and finish the war. You can't keep bombing from 30,000 feet and think you're going to accomplish, okay, an ending. You'll raise hell, but you'll never end the war. You got to put boots on the ground. And he's got to do this very quickly, because any war, okay, especially near the Strait of Hormuz, is really bad for the stock market, because it threatens our oil supply, pushes inflation up, pushes our yields up, which crushes stock sectors and that need low yields, like our AI, our chip machine, the companies that make the chip machines, and the people who buy the machines, staples, healthcare, home builders, materials. It kills them. This war is killing them. Okay, it's pushing those yields up and crushing those sectors and making stuff very expensive and hurting the consumer. We've got to stop this war. We've got to stop every 30 days, stopping to give them 60 days and talk about peace when they're never going to do anything about peace. They're just going to lie their way through. Every pause is to rebuild their arsenal, to get their bullets, to build more missiles. Everybody knows that, okay? I think even Trump does. I don't understand why he keeps stopping. Why do you stop bombing as you're negotiating? You don't have to. But anyways, from the market point of view, it's really hurting this market. It's making the market unstable. And this is where you really got to learn how the market works between yields and the flow of money. Once you learn that, it doesn't matter. And once you learn how to read the market, between the yield tells you which way the market's going to go, the trend tells you, okay, is the money flowing in or out? And once you know that, and you know how to sell short as well as go long, you don't care what a mess the market is. You want the market to be a mess, but you got to know how to short, and you got to know how to read the market. And unfortunately, 65 million people don't. The 65 million people trade every day, and instead they listen to CNBC. So right now, we got a real mess on our hands. If you don't know those things, if you do, you're making a lot of money. Now, higher oil means higher cost of every company: airlines, trucking, retail, manufacturing, and it kills earnings. So companies are hiding a lot of their expenses. They're not recording them. So again, if you know how to follow the yields, it'll show you where the money's supposed to be going. And if you know how to follow, if you know how to read if money is coming in or going out of that company, then you know exactly what to do with that stock. But people don't know. But markets hate uncertainty, and that's what we have right now. And people are getting discouraged in the market, because it's getting bad, one day up, one day down, different stories, all kinds of noise. Get rid of the noise. Don't listen to CNBC. Don't listen to Fox Business. And again, learn your yields. Okay, so this war, okay, is really negative for stocks because of the oil risk. And the Strait of Hormuz is the world's oldest checkpoint, or choke point, I should say. And it's blocked, it's threatened, it's unstable. Oil prices jump, inflation jumps, yields jump. Now, if you know what you're doing and you understand if yields are jumping or not, you can make money. But if you don't understand what yields are, you're screwed. So people have no clue what this market is doing to stocks. And the stockbrokers, most of your brokers don't understand how to trade a market. No, they don't. Okay, these kids come in from college, they don't know anything. They sit them at a desk and they tell them, take these stocks here that we own, our company, Goldman Sachs, whatever. We own these stocks and we want you today, push these stocks. And if let's say those stocks are sending out a warning, let's say those stocks, okay, they only do well when yields are going down, but yields are going up, and they're pushing stocks on you that yields are going up. How do they do that? They create a story with CNBC, they tie it to one of these stupid fundamentals to make it look legit, and they push that story out there. So people are going to get crushed because they're getting into stocks they should not be in. And the only way to find that out is get some truth serum. If you get truth serum, you will know if you should be in that stock or not. When your broker tells you to buy a stock or sell a stock, he works for Wall Street. He doesn't work for you. So you've got to go check and go to the truth serum. There's a whole bunch of truth serum, okay? And its yields will tell you exactly if you should be buying that stock or not. Food prices, gas prices, all affected. Manufacturing costs are going up. Boy, they're hiding all of this crap. But we can make a lot of money at it because the more volatile the market, the more money we make. But not if you only know how to drive a car forward, you don't know how to go reverse. Let's say everybody, the 65 million people who trade every day, the 65 million Americans who don't know anything about yields, they're the same people who bought a car with forward but no reverse. They're the same people in the stock market. They have no idea, okay, what it means with higher yields, lower yields, discretionary stocks. So just to give you an idea, today they're talking about leaders, right? So they're talking about leaders. And when you look at the stock, I mean, this was crazy today. They had, for example, let me give you just a few of these stocks here. They're talking, these were leaders today. They're talking about Caterpillar, okay? But Caterpillar, a leader? Caterpillar likes high yields. See, if you knew that, if someone told you on CNBC and told you a story why you got to buy Caterpillar, and they'll tie the story to some fundamental, sounds legitimate, and they're telling you buy Caterpillar today, remember it's a leader? You don't buy Caterpillar today. Because why? Because one, the trend tells you as Caterpillar was going up, the big money, smart money, was being pulled out. So it's going up for the wrong reason. It's going up because people who shorted it, who sold it short and made a ton of money from $1,000, okay, down to $775, they made a lot of money. They got to buy that stock back. So what's happening is you're being fed a story to buy Caterpillar today, and you have no idea that you should not be buying Caterpillar. You should not be buying Caterpillar. And Caterpillar is going to turn around and collapse. But you don't know that. You're just going to go in and buy Caterpillar. Here's another one. They said it was a leader. Boeing. What are you, nuts? Boeing a leader? It's no leader. You got to be nuts. It's not breaking out. It's been in a downtrend. I mean, look at the downtrend it's been in since May. It hasn't broken out that downtrend since May. Okay? And again, money is pouring out of that stock. And it's showing you that all it is short covering. That's why it's going on, not because institutions are buying. So if you got into that stock, you're going to give all your gains back. Honeywell, are you kidding that? A leader? I mean, that looks like a train, like Mickey Mouse is going west on an eastbound train. Banks, this is another one. We're making a lot of money at J.P. Morgan, Bank of America, some other bank stocks. Now, bank stocks are going up like crazy. But for the wrong reason. They shouldn't be going up. Why are they going up? Well, because again, you're seeing all this money that's coming out of tech, and they're trying to park it somewhere, and they're plowing it into banks. So banks are going up, but it's important for you to know if you're buying the bank stocks, okay, they're going up for the wrong reason. They should be going up because yields are going up. No, they're not. Yields are going down. But why is the stock still going up? Because you look at the money, the big institutional money, they're pouring money into the bank stocks. They're parking money into the bank stock. You can spot that. You can see it by its trend. They're pouring money into a stock that the yields are against the stock. So it means that the bank stocks continue to go up, but while you're trading them, investing in them, you got to be well aware that they're going to correct at some point. If you don't know how to short, you don't know the signals to get out, you're going to get crushed. But for now, that's a good stock to be in for the wrong reasons. The yields are correct, but everybody's in the stocks wrong. The only thing holding the stock up is money. There's money going into the stock. But it's being parked there. It's not because it's a good stock. That's a lousy leader. Goldman Sachs, that's no leader. Are you kidding me? That's a terrible stock right now, Goldman Sachs. It's a terrible stock. Tech stocks like tech stocks like CRM, okay? Now CRM, Salesforce, that's a legitimate stock. because yields are down and the stock's going up. That's legitimate, and a lot of money's going in. That is a legitimate stock. You buy it. Microsoft, okay, that's a legitimate stock. Money's going in, yields are going down, and the trend's going up. That's legitimate. But the stocks I just gave you aren't legitimate, and you got to identify the difference. Your broker's not going to tell you that. The noise on Wall Street, they're not going to tell you. You think CNBC is going to tell you? They don't work for you. They're pushing the stocks that Wall Street wants pushed. They're pushing the stocks that BlackRock, Vanguard, State Street, Fidelity, T. Rowe Price, and Capital want pushed. It's not always in your interest. So again, there's no place like the market to make money, but you've got to know what you're doing, okay? You've got to know, okay, if what they're selling you to buy this certain stock is legitimate or not, and you can know in 2 seconds if it's legitimate or not. If you don't have that knowledge and you're following them, you have that herd mentality, oh, they must know what they're doing, they're on TV, you're going to get crushed. But and it's so easy to identify if a stock call is legitimate or not. Wall Street doesn't make legitimate calls. Wall Street makes calls for Wall Street to get richer. They don't care about you. So they can move stocks just like they did this morning. Imagine at 9:30, since midnight last night to 9:30 this morning, it was showing that yields were going to open down. Yields were going to go up. Yields were going to go up. So everybody's getting ready to sell short the tech stocks, right? And then right at the bell rings, what does these guys do, Wall Street guys? They go and they buy all these bonds to push yields down so that these tech stocks would start going up. Not legitimate, and you should know that. Then you can make a decision if you want to buy the stock or not. But only buy stocks if there is a legitimate reason to buy it. But you got to know that you got to have the tools to do it. Okay, so that's all I can tell you today. Trading is easy. What makes it hard is Wall Street. They're working against your interests. And trading, anybody could trade. You could take a kid out of the 5th, 7th grade, 8th grade, and he could make a fortune if he didn't listen to Wall Street and he just learned how to read some charts and understand yields and understand flow of money. Very easy to do. The kid make a fortune. The problem is you're listening to noise. You got to stop listening to noise, okay? And we'll help you, all right? philsgang.com. Join me again tomorrow for some more insights. See you on the charts.